Well, as you saw with equity futures, they took a leg lower. Treasuries got a pretty big boost after those very disappointing ADP jobs numbers. For more, we're joined from New York by Bloomberg Best and Nomura's chief economist, David Resler. David, I mean, there's some noise in these numbers. What do you make of them?
Well, I think the data are pretty consistent with what we've been seeing in other parts of from other data on the manufacturing sector in particular, and that is a slowdown in economic activity in both April and May. And we attribute much of that slowdown to the interruption of the supply chain of auto parts and other components coming to the U.S. That's cut into production of U.S. motor vehicles, and motor vehicles, of course, need other parts as well. So that probably is having an impact across a fairly broad swath of the U.S. economy right now.
Right.
And we think it's going to prove to be temporary. Already, auto parts production and vehicle production in Japan is picking up. We're told that Toyota is going to be at 100% of production later this month, if not early in next month. So we're looking for a turnaround in this, but not immediately. Probably another month or two for the U.S.
Okay, then, David, does this change your outlook on the jobs data on Friday?
Well, we had expected to see an increase of 200,000 in this report, so we probably will be shaving that estimate a little bit, because this is confirming what other data are telling us, that there's been a slowdown in manufacturing employment. Other data, though, aren't quite as weak. The Intuit job estimate of small businesses was pretty firm in May, and that suggests and confirms what we see in this report, that small businesses and medium-sized businesses are doing better than large businesses. Virtually all this weakness, or the biggest part of this weakness, came in a deviation from trend in large business employment.
But David, let me point to the housing data we got yesterday from Case-Shiller, which showed that prices are down to an 8-year low. Doesn't that tell you that there's not going to be any substantial in jobs recovery until we see the housing market come back, and that doesn't look likely right now?
Well, that is absolutely true. We have not expected to see much of a recovery in the housing sector this year, so that isn't particularly news to us. It's more or less confirming what we had been thinking about the recovery or lack thereof in the housing market. And the big part of that recovery in the housing market is a function of the mortgage mess that we have, with so many homes in foreclosures and not being resolved in the legal process in a quick and orderly fashion. That means that properties stay in weak hands and deprive potential buyers and sellers of good price information about what properties are truly worth.
Okay. So, David, what I'm trying to get a sense of is that, even though we seem to be hearing pretty much, consistent jobs data, which is that things are recovering, but it can be quite volatile and there's one-offs here. What does that mean for your growth forecast for the U.S. here? Then does that point to a substantial slowdown in the latter half of this year?
No, I think the second half of the year is going to be stronger, because we're going to get a rebound from this slowdown that we're experiencing right now. For instance, motor vehicle sales and production is probably going to be a drag on economic activity in the second quarter. We've cut our second quarter growth estimate from 3% to about 2.6% growth, but we've offset it with upward revisions to the second half growth as we see auto sales and production kicking in the second half.
David, thank you. Really appreciate it. David Resler of Nomura Securities, Bloomberg Best on the economy.